let's turn to SPACs now, although we can also talk a bit about the White House. As former White House economic advisor Gary Cohn is becoming the latest high-profile investor to get in on what is something of a craze now. He's teaming up with investor Cliff Robbins, of course, Blue Harbor, somebody we know well. They're creating a blank check company that will be known as Cohn Robbins. Former National Economic Council Director Gary Cohn joins us. Gary, I like to say that these days it seems like everybody's got a SPAC and a dream. So I guess my question is, what's your dream?
David, first of all, thanks for having me. Look, Cliff and I paired together because we think there's a real opportunity here in middle market companies. We're looking at sort of $3 to $10 billion companies that are getting overlooked in this economic cycle. You know, we've seen what's going on in the market where the big cap companies are doing well, but some of the smaller companies are suffering. We think we can bring our pool of capital to those companies and really make a great acquisition for our clients.
And the areas that you're looking at and your reason for doing it, I mean, I guess I know why. Obviously, you get a significant participation in the company that gets brought in. But given how many others are out there competing with you, what do you believe is yours and Cliff's ability to necessarily deliver a deal that is going to be beneficial?
David, we do think Cliff and I bring a unique perspective. We've got over 70 years in the financial services industry, buying, selling, advising, owning companies. Cliff has an amazing track record in both public and private companies. I think everyone's aware of my track record. We're both going to be actively involved. We'd like to buy a company that we could be involved with, sit on the board, help management continue to drive the company and drive market share. And we're looking for something with real long-term growth. We're also in a size SPAC that really has differentiated us from what I would call the masses of the SPAC. So we really do believe we're in a differentiated place. And we also have a unique position where, Cliff and I, the only pool of capital we have to invest is our SPAC. So when we get up every morning and we're looking at opportunities for our SPAC.
Right, and I think it's an important point you raise in terms of you're larger than most, and therefore you're looking in sort of a somewhat different area, although you're not as large as Ackman's, which kind of puts him, I don't even know where in terms of what he's looking for. But I still wonder, what's the pitch? If it's a company that conceivably could hit the public markets on its own, or is it not? Is it something that's got hair on it in some way, or that requires getting more quickly to market? What is the pitch from you in terms of whatever company it may be, go with us as opposed to hitting the public markets?
So David, look, we don't know for sure. We've got a list of potential opportunities that we're going to look at. There's a couple aspects that we bring. We bring surety of execution. We bring price transparency. We bring cash to the table. It doesn't mean that the selling company is getting out of the asset. They're going to be our partner. They're going to be our long-term partner. They may own the vast majority of stock in the new co, but they're going to get real cash off the table, and they're going to know how much cash they can get off the table, and they're going to know how much of the company they own going forward. And we're taking a lot of the risk off of off the table. And look, as the market re-rates, and we think markets will re-rate for these mid-cap companies, they'll own a large portion of the company.
Gary, it's Sarah. My question on SPACs is, it's you, it's other big name investors, it's small name investors, it's the former House Speaker, Paul Ryan. I mean, all of this reeks a little bit of sort of giddiness of the market, that you're just selling this idea that you're going to buy real companies, and there's been this mania around it right now. What does it say about the kind of market we're in? And does it remind you of the NASDAQ in the 90s and some of the frothiness that we've seen in other parts of this market?
Sarah, remember, with the SPAC, the ultimate shareholders get to vote on your transaction. So you do have a pool of capital, but ultimately your shareholders have to approve your transaction for you to go forward. So there's no guarantee that you're going to get a transaction done. There's no guarantee that you're going to get something done. So look, your shareholders, not only do they initially give you capital, they get a second opportunity to approve your transaction. Not all these SPACs are going to make it over the finish line. I think that you'll see over time they will get thinned out. I've heard this argument time and time again in financial markets. Oh, there's way too many of them. And that can be true, but what tends to happen is the better ones rise to the top and the weaker ones thin out and fall out the bottom. We think we are one of the very strongly well-positioned SPACs.
Gary, good morning. It's John Fort. I really want your
Hey, John.
take on the meaning of this potential TikTok transaction, particularly because of forced technology transfer and joint ventures that constitute, or at least look like they could be, kickbacks to a political party in power. This is what technology companies have complained about China doing for a long time. And doesn't it look like the Trump administration might be doing that here?
Well, look, I thought the three of you did a very good job of summarizing where this potential transaction sits right now. I don't understand what's going on, and if this is as simple as a forced technology transfer, I agree. This is something that we have complained about for years that makes no sense, and we want fair and open transactions, and we want fair and open markets, and we want transactions to make sense, and we don't want governments intervening in open markets. So, you know, I would agree with where the three of you were prior to me coming on.
What do you think about the environment we're in overall, Gary? The fact that we're seeing so much M&A, does it signal a confidence in the future, given the so much uncertainty around the virus and the job situation, and then obviously the major headwinds that we face still? Are you encouraged to see this kind of deal making? What does it say?
Look, Sarah, you know I've been fairly bullish the whole cycle. You know, I've always talked about the resiliency of the United States economy, and we should never underestimate the U.S. economy. I thought the first CARES package and the stimulus was really necessary, and I still applaud the federal government for getting involved in making sure that we could get through the early stages of the crisis. But now, if you think of where we are from an economic standpoint, we continue to grow, we continue to bring people back to work. We still have some weak spots, and we've got to acknowledge those weak spots in the small businesses, particularly travel, leisure, entertainment, hospitality. You know, watching sports over the weekend with empty stadiums, it's sort of heartbreaking to watch a 4-hour tennis match with no one sitting there in the stands, or football. We've got to figure out a way to bring those people back in, because all of the ancillary businesses around them are important. That said, the U.S. economy continues to fight back, and we're relatively strong. And I think what you're seeing is in the business community, they're saying, look, this is a really interesting opportunity to consolidate and buy some assets that I may not be able to get my hands on in the future. As the economy continues to grow and get stronger, these assets are only going to be more valuable. And if I can consolidate them into my existing asset structure, I'm going to be a much stronger company going forward. So yeah, I think it's a way that companies are expressing their forward bullishness in the U.S. economy.
I'm curious, Gary, as to your thoughts about the need for additional assistance overall, whether it be to small businesses or to states and municipalities that are suffering significant budget shortfalls. Not clear we're going to get anything. Do you think we need it?
Yeah. So remember, David, the first set of fiscal stimulus was a blunt instrument. We sort of spread it everywhere, which at the time was the right thing to do. I think at this point we need a much more detailed or scalpel-like approach. And the place where we need it the most is in the small business community. Our small businesses in this country, and they're a key to our success, they're a key to our economic growth, and they're a key to jobs, they still are hurting. They're really in need of more stimulus, they're in need of more help, and we don't want to see those businesses disappear. If they disappear, the larger companies get the market share, and it's virtually impossible to fight it back. So I would be a huge advocate for stimulus for small businesses. Now, I don't know if that comes from the federal government or it comes from state and local governments, but if it comes from state and local governments, they themselves are in such a tough financial position that the federal government would have to give them money so they could then pass it on to the small businesses within their states and cities.
Finally, Gary, I know you worked in the Trump administration. You going to support the president's reelection, or are you going to vote for Biden?
You know, I honestly haven't made up my mind. I'm really eager to see an economic debate between the two of them. I actually vote on issues. I'm a Democrat. I remind people I'm a Democrat. I was one of the few Democrats, maybe the only Democrat, to work in the Trump administration. I care a lot about the economic issues. I care about the deficit. I agree that this Corona situation was a time to allow the deficit to expand. But our current, and we saw the numbers today, our current $3 trillion deficit, annual deficit that we're having this year, cannot become the new steady state. We have to have a plan to get back to a more normalized fiscal picture once we normalize and we get back to a normal economy in the United States. And I really do want to hear where the two candidates are. Just taxing to spend doesn't make sense to me. We have to have a plan to get our fiscal house back in order.
All right. Well, a conversation to be continued, as well as, of course, waiting to see what you guys do in terms of a company you take public through your SPAC. Gary, thanks for your time.
Thank you. Thanks for having me.
I think he's going to be waiting. Neither party's talking about the deficit. Coming up.